Hey, it's Mike with PriceActionTradingSystem.com, and it's Wednesday. It's May 1st, start of a new month. This will be our chart lesson for today. And um, really, what we had was a two-tiered channel down here. You couldn't get this really, or you might have had an idea off these first two swings, but you really didn't know how to draw it here. I think it's better drawn the way I drew this shorter term trend in between here. So you really couldn't confirm this one until we came back here. When it turned down here, I would draw that and I would draw it off these, and you can see we bounced right off of that there. We got a break here during the FOMC news. And you can see even during the FOMC news, the price action still follows through. That's the beauty of price action. You got a little overextended here, but it's still, you get an overshoot, you move to a new low, and you think you're going to get two legs down, which would have put prices somewhere in here. But this thing moved quite a bit further down. Something the market didn't like about the announcement. They said they weren't going to raise rates, so you'd think that'd be good news, but and that's why we don't try to read into the news. Even if you knew the news in advance, you don't know what the market's going to do. And I try to tell people that, and people think that, hey, if you knew some of the inside information ahead of time, it might be valuable, but you don't, because you don't know how the market's going to react. You would think the market would go up on the fact that we're not going to raise rates, but instead it goes down. And it goes down pretty hard. But we were overdue for a little correction here. I mean, we were getting close to 3,000. Now we're back down to 2,900 basically, just above the 2,900 level, and that's probably a more realistic level at this point. Usually after a big sell-off, though, it's not long before you get a big rally. So if it was to do this for a day or two, or even just today, it may pick back up to, whenever it picks back up, it'll probably be a nice rally. That's generally what happens. So, but yeah, the area marked off in here is 12 to the news announcement, and until the market was really kind of acting normal again. We were back in the channel right in here, and I marked a couple of trades. I guess you could still say the market was acting normal. We were still following the price action. It wasn't moving quite as fast by this point. So I marked a few trades there, and there's a couple more here late afternoon, right before 2 o'clock. But most of your trades were early. So let's back out a little bit more and talk about. This was really tricky here. This is, even though we're still working down, you can see how sideways this is. And really what I did was I drew this channel, and then when prices dropped lower, I just took a measured move, and even though we went lower than that, we got back in this, and you can see we fell out the top, fell out the bottom. And one trader sent me a couple of questions. He got all chopped up in here. He kept looking for shorts, which you would think you would, because you got a channel working down, and you get an overshoot, or you get a break here, but notice you got an overshoot first. And that overshoot, generally, a lot of times you won't get a new low, and you'll reverse. So he took a trade right here, which I don't like on my chart because it's got a lot of stem. It's not a very good signal bar. I'm assuming the reason he took this is because it's a failed second entry long. That's your new high, pull back first entry, pull back, and then there's a second entry long there. And it looks like it's going to be a failure. Technically, it doesn't fail. You could have got a scalp out of that, but that's close enough if you like the rest of the what's going on. But notice all that support right in there. You just, it's too dangerous to go short right in there. Yeah, we pushed through a little bit right here, but it's still a double bottom across there. And then once we bounced here again, you definitely shouldn't be looking for a short in there after that. I think you would try to go short again right here, or maybe right here. I'm not sure where at, but by the time if it was right here, by that time now you got a trend working up, and so you're better off just to stay out of this stuff. I could take his argument on this one trade here if he was looking at it as a failed second entry long. I could see how maybe, but still you had to pay attention to this support right here. We bounced here once, we made a higher low, we basically made a double bottom, so we made a low and then two higher lows in a row, and that's not a good sign. Especially if you got a channel working now and you've already had an overshoot, because the market may reverse. And really, you got two legs up right here, one leg correction, second leg, but that's probably one leg. I'd measure that. And then once we started going higher, I'd look for a second leg. You see, we outdid that by a long shot. But you really had all this sideways stuff going on here. And if you didn't see these little sideways channels here, then I mean, it wasn't obvious. This one was probably here until we bounced a few more times right here, but it's there. So and you should be drawing your lines across there and just being aware of them. One thing that you always got to be careful of is going short into support or going long into resistance, especially if you've already had an overshoot and then a break, because you may not get a new low. Even if you didn't have an overshoot, you still may not get a new low. Nothing is 100% in trading. You know, we know how to put the odds on our side where we can get them right 90-95% of the time, but nothing's 100%. The market's just not that it's not that precise. And that's why we can't just write a program to do all our trading for us, because if it was that precise and you could count on everything working 100%, then we'd just write programs for all this stuff and walk away from it and let them do all the work. So anyway, let's talk about the trades. First trade I saw was, notice we got a first entry, and you pull back, you get a second entry long right there. When it broke lower right here, actually when it broke lower right there, but that's still all part of that move. There's a little two-legged move up, pull back, and a second leg. So there's two legs there. When that failed to go any higher, and when it broke lower, actually when it broke below that bar, that's a second entry short on what looks like a failed second entry long on a move back down after two legs up. So we're probably, what we've been seeing lately would mean we'd probably get another leg down. It would look, at a minimum, we're going to get a leg probably like that right there. So that would be your target. Notice how we started going sideways there, because people are exiting because they know that's their target. And plus that makes a double bottom right across there. And so I didn't draw my line all the way across, but you can see it basically right there. That's the same thing. I just drew it right across here rather than all the way across. But if you come up here under those closes, you can see that's the line I drew across there. And that's why I drew it. And then now it was support, now it's acting as resistance. So notice we make that high, we come out, we test it once, we test it twice, we actually break higher and turn down and go out the other side with that big bearish bar. I like going short right there. I'm not as crazy about it down here because you don't have much room left. What you might do is let it break lower, drop a limit order back here another tick or so, just to make sure you got enough room, and it would have come back here and filled you, and then you could have ridden it on down. So past that, you just can't go short in here. It's too much support. And actually, I probably would have moved this down right across there once we had those next few bounces and closes. That looks like the better spot for it. And then if you measure it, it's more like down here for this to get your equal distance. And so there is a little breakout pullback short right there. I didn't mark it. There's a midline working down through here, and prices are working on that midline. So you might take that trade. And you could argue for it to be maybe even red. It is a breakout pullback short and a pretty strong downtrend, but I'm just going to make it green. I think, I think it's a little risky because it is right off the EMA. It is a nice bearish bar. It's just a little close to those lows. And that's the low from yesterday too. So that's an important low. It drops on down, bounces, you get your two legs up. You can't, even though you got an overshoot here, you went all the way back. So you don't want to go long right there. You'd probably want to wait on a short, and then we get a second entry short right here, two measured legs up. That's the place to go short. It might have scared you off when we had that next bar that didn't break lower. And so if you didn't take that trade, don't beat yourself up, because this is one that it's not a perfect setup, but it still fits the rules. We're still looking for a possible retest of this low. And off it goes. It takes a little bit. There's a lower high right here, but once this set up, I definitely wouldn't have gone short. And that's a doji, basically. It's not a very good signal bar. Even though it moves on down, it's not a very good setup. And then, of course, you get a first entry here. By the time your second entry came, which is what you definitely should have been waiting on, you can see there's no reason to go short right there. The only reason you might go short here again is it's a failed second entry long, but you got to go short right into this support on if you measure this down, that's a perfect measured move down. It's just not a good place to be going short. And then when we start just kind of going up and down, any way you try to enter, you're probably going to get whipsawed until here. Maybe you take this one because you made the low, came back, you tested it once, you tested it twice, you got a big bullish bar. So now some of your smarter traders start trying to get long here. And you can see how that rocketed on up a little bit before it came back and tested this trend line again. It gives you another entry right here off that trend line, but it's right back into all this support resistance. It does close on the upper side, but I just think you're better off to skip that one. You could argue for it to be green because you got plenty of room to get out before these highs back up here, which if you stretch that across there, and we could be heading, this could be a range day and we could be heading back up here. Now it's really looking like a range day. I mean, we're going sideways here and prices are above and below the EMA. So this could be a range day. But obviously when it comes up here and it turns us down right here, it makes a lower high right here. I would have liked it better if it broke higher, but by that time you probably could have found this trend channel. You could easily see the midline. You draw this across those two lows, drag it up, and I mean it fits perfect. We're probably headed back down now. So we're at least headed back to the EMA and probably back to this trend line. Look at that big overshoot too. You might have been a little concerned that maybe this is two-tiered. So you had to think about that. Maybe this is a midline, but I just think it's an overshoot in the end. Doesn't matter because the bigger pattern overtakes it and sends it right back to the lows again. And if you didn't enter here, you just have to watch this one. There is a second entry short right here, and we're not back down the low, so that's a good entry right there. That's why we like to wait on second entries. You don't always get second entries, but especially on really tight trend channels like this one, that one's pretty tight. So there's not a lot of room for, first and second entry or second entries in there. You're usually only going to get a first. But even if you'd entered on that first entry, you'd have been okay. You would have had to ride this out. But I always tell people, wait on a second entry short most of the time, and unless it's a really tight and one of those strong trends that I show you that just keep going and going. Even though this is a strong trend, it's not one of those that just keeps going and going and going. It's just we're just moving from one end of the channel to the other on this. So it's not one that you generally probably want to wait on second entry. And if you do that, you're good to go here. Even if you went on this first entry, you were okay, but that could have easily ticked one tick higher and then went down and you'd got burned. We bounce off the lows. There's a reversal here, but look how that stacks up. It's still way below the EMA. I don't think you risk that. It's a failed second entry short, but just skip it. Even though it takes off, just skip it. Comes back, gives you a second entry here. Not a very good signal bar. If you had a good signal bar on your chart, you may take that second entry. Well, actually, let me back up. That takes us into the FOMC news. So no, you're not going to take any entries in here. That's the it's just not wise to enter about an hour before because you can get stuck. If you enter in here right around 12:20 or so and you get stuck in that, there's nothing you can do to get out except probably take a loss or get out with a tick or minus a tick or two, and because suddenly it does rocket up. And you might have got lucky. You probably, if you were going to enter here, you should have been long, and you would have got lucky on this one because that's probably where you would have got long, either there or here, and it never broke below that. But it could have easily broke a tick below that and took off. But if you got short in here, then you really got burned. I mean, you might have been looking at this like a failure to go high and thinking, oh, I'm going short. So just stay out of this and wait till the market to settle back down, and notice how it rockets up and it's jumping all over the place and then rockets back down, and it gets back in the channel here and comes back and tests it and gives you a failed second entry long right there. I like going short there, and maybe even here. If you had a better signal bar, I'd say yeah, right here. But it's still a bit of a trap right there when it tried to go back higher and turns back down. It just was like a little double test of that trend channel or the trend line, not trend channel line, because that's down here. This is a down slope. So it actually breaks higher here and turns back down. So that's another one you might have considered, but it's too so close to all these lows across here, and that's the same thing that would have burned you over here. So you're better off just to stay out of them. And then we come over here and we get a second entry long right here. Notice that high first entry, then it drops down and turns back up and goes out the other side on a second entry long after it just came off the lows. So we're probably headed back to the highs. There's a lot of overlap here, so this is also a little failed break lower. But a lot of times those will fail out the other side, even if it's going higher, and it may trap you out. So you're better off just to maybe skip that one. But when it bounces again and confirms that trend line, just go long right there if you can get in that one, because it gaps over. Notice right there. And guess what it's gapping over right there? It's gapping over a support resistance line from that little range. If you draw that line, you can see it gaps right over it. It closes on its high and opens on its low, and it doesn't overlap. It doesn't back up or overlap. And that tells you probably got your lines, and you can see that right there, a little trading range, and you drop out the low side, out the top, then back out the low again, and then off it goes. So you may not have got in that trade, but if you could, I wouldn't have a problem taking that one, because we're probably headed back to the highs now. And you can see it didn't turn out that way. We tried to go higher and just couldn't, and it sells off again. And what I would have looked for was a measured move. I would have, if you were still in a trade going short there, which I doubt you were, it's possible you might have taken one of these shorts. I'd look for a measured move. Actually, I would have measured from right here. But the downtrend actually started here, so if it kept going lower, then I'd move it over here. And you can see we actually went a good bit further than that. So, and what you probably would have done, should have also done, is measured this move right here, and then measure from here. And that would have got you this target back down when it moved back down here. You can see that's almost a perfect measured move. So use those measured moves because they help you. Most of the time they're correct within a few ticks to a point. Some cases like today when the market was spooked and got negative, it just kept going. So, but yeah, it was a pretty good trading day early on. This afternoon was a little more sketchy, and of course you just have to sit this out. You don't have to, but if you trade it, just trust me, you're going to get burned more times than you're going to make any money, because even if you get it right, and you can see the price action still plays out even during high volatility news items. When we came off this low, we should have been headed to the high. And where did we go? Right into that. We ended up getting a break of the trend line and then 2 legs down to a new low. Much more than 2 legs down. But the rules still hold up. And so, follow the rules. And that's how you anticipate what prices are doing. If you find this channel, once we reach the high, you can anticipate prices trying to go to the low. And once you hit the low, you can anticipate prices trying. And so you don't know exactly how they're going to do it, but you know that's where they're heading. All the way through all of this, that's where they're headed, back to the high. And then, of course, we get a break, and then where's it headed? Back down to make a new low. And, you might go sideways a lot here, but you still end up getting 2 legs down. And so follow the rules. Anyway, one other thing I wanted to say, going back to the trade I talked about over here, the guy asked me where I said this might be a failed second entry long, was the only reason I could figure he was taking it. I told him this, and I tell people this a lot, but I probably don't say it on the videos enough. Failed second entries are basically traps that fool people into entering the wrong direction, then it whipsaws them and turns, and they're great setups, but you need to be experienced with them. And so I tell most new people, just forget about failed second entries and concentrate on learning everything else, because once you get this down, a failure is obvious, and you don't have to second guess it, and you don't have to wonder if you're figuring it out right or all that, and that's why I don't talk about it much in the manual, because it just confuses people. And I see that, I get more questions on losses about failed second entries than anything, and it's just because people think they see, there's there's second entries and failed second entries all over this chart. But if you understand the context and what's going on, it'll make a lot more sense to you. So just forget about failures. I'm going to talk about them, but don't be trying to trade them too much until you get a better understanding. When you see one and you think you got it figured out and it works, then you probably had it figured out. When you see one and you think you had it figured out and it doesn't work, then you were just wrong. It wasn't a failure. It was some kind of trap or whipsaw or whatever. But you're just take my word that you're better off to forget about those for now and wait. Just wait till you get more experienced on those, because they just confuse a lot of people and mess a lot of people up. And this is a good example of occasionally after 2 o'clock something good happens. That's a great move down. So if you had a runner, if you got in up here somewhere and you had a runner going down, I wouldn't have any problem holding that all the way down. Just draw that trend line, and as long as prices keep turning down off that trend line, I'd keep riding it. And you can see that working down through there. You didn't really get a break till here. And if you'd have waited till you got the first break outside of that, close outside of that to exit, you could have ridden that all the way down. And you can see that trend line working all the way down right there. And even then, you're probably going to move on down, but I usually, that'd be my exit when I got my first close outside. If a bar breaks above that one, I'm probably out. And that would have got you out way down here, very close to, well, that almost got you into 3 o'clock, and most of your brokers are going to kick you out at around 3 or a little before anyway, and you don't want that to happen if you're, I mean, that's probably okay to happen if you're in a runner, but don't let that happen to you in a regular trade, because, and that's why I tell people not to trade after 2 o'clock, because a lot of times it just does this, goes sideways, and you get stuck in something, just like going into the news here. You get stuck in something, and then it's too late, and there's nothing you can do about it, and you get burned. So just keep that in mind. But anyway, I'm going to wrap it up. We'll be back again. I can't believe this week's almost over, this new month starting, but tomorrow's Thursday, so we'll be back tomorrow to wrap up our week. And hope you had a good trading day today. Hope you're having a good week. We'll be back again to do it tomorrow, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.